This is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I am also the trader behind the Trade Spotlight advisory service. Trade Spotlight is broken up into three segments: the Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Future Spreads. This is Beyond the Spotlight, a video that spotlights two or three markets that may become trading opportunities for this week. This week begins with Monday, September 30th of 2019. Before we jump into the charts, please pause the video and read the disclosures so that you understand the risks involved with futures and commodity options trading. Quick look at what the advisory service looks like. It's an email service, so directly into your inbox. You will have the timestamps, so you know when the trade recommendation is sent out. You'll get a write-up on the trade, so you'll have the ideas behind the recommendation, the precise entry and stop loss and target orders. This is a spread trade, and it'll reflect in the top left-hand corner. If it's a futures contract, the entry, stop, and target. If it's a commodity option trade, you'll have the risk and the potential reward on the trade. And then you get a chart so you can see the snapshot of the trade recommendation. Okay, so I want to review three charts from last week because one trade materialized and two, I believe, are setting up for trade recommendations for this week. So if you watched last week, you will note that I recommended selling the December 2019 NASDAQ on a break of these lows here in this trend line. We sold the contract. We trailed our stop loss a couple times. We did liquidate the position Friday afternoon at 77.03. We sold the contract at 77.63. So we made a profit of 60 points. So we are out of this position. But I just wanted to show it up here. This was a trade that we discussed in the video, materialized. We traded the plan, and we are out of that position. Let's go to the next chart here. This is the December 2019 30-year bonds. So again, if you watched the video last week, I pointed out a 1, 2, 3 top formation. This is a trend reversal formation. We already had the number 1 point in place. That number 1 point is drawn off right here, or circled off right here. You can see it was from the 28th of August at 166.25. It took a couple of days when the market sold off back below the 61.8% Fibonacci retracement of this big rally that we saw in the middle of the summer. This number 2 point down here is circled off. That is 157.17 from September 13th. In last week's video, I drew off another ellipse up in this area, looking for the market to trade back to this level, potential resistance level just above 163, and we did just that. We had a big bar session here. That was on the 24th of September. Then the next trading day sold right back off on the 25th. Traded sideways since, but there looks to be an opportunity to sell this contract on a break of this pivot point low right here. That pivot point low is 161.04 from the 25th of September, and perhaps even this 50-day moving average at 160.27, just for a little more confirmation that indeed we are breaking out to the downside. There's a 20-day moving average up here at 161.30. A crossover of this 20-day moving average with this 50-day moving average is another bearish signal. So perhaps we wait a little bit longer for that confirmation as well. You can see the trend is relatively flat. The MACD, that's the MACD, the stochastics indicator showing momentum is flat as well. So perhaps it would take a break of this low or the 50-day moving average. Ideally, we get into the position before we get down to this number 2 point, because that would be a first target down at this level around 158. Otherwise, we can come all the way down here. 152.05 is the low point from the 12th of September. Actually, that low is 152.04. I'll adjust my line down a tick. Stop loss would most likely go above these two session highs, as I believe that's a pivot point potential resistance level. So keep your eyes out for a trade recommendation in the 30-year bonds this week. Okay, then the third and final chart today is December 2019 Chicago wheat. Again, this chart was on last week's video, and whatever I said about the bonds, strike it, reverse it, it's the opposite for the Chicago wheat. We've got a 1, 2, 3 bottom formation. This is a trend reversal formation. We're looking for this market price to head higher on a break of the number 2 point. So I had the 1 and the 2 points drawn off. That number 1 point is down here. That is the low at 415.5 from September 3rd. The number 2 point is this high right there. That's circled off with an ellipse. That's the September 18th high of 492.5. I had a circle or ellipse drawn off here, and the market did indeed trade down to this level, which you can see is also a 20-day moving average at 477 and 7/8 of a cent. It just looked to be a potential support level with all this trading activity in here and this moving average. So we circled that off. Market did get down into there, and now it looks like it's heading higher. So we're going to look for a long opportunity in this market. One thing to keep in mind that there is a crop report Monday, September 30th at 11 a.m. It's the quarterly stocks report. So, I'll make a decision Sunday night, Monday morning, if we want to work in order before the report or wait till after. Obviously, there's risk rewards with doing either of those options. But I do believe in the formation, so I may just stick with the technicals and let the crop report do what it may and go from there. Potential stop loss would go below these lows and that 20-day moving average. Upside target could be the 50% Fibonacci retracement of this sell-off that we just witnessed through the beginning of July through September, or we may look for a higher target, and we could come all the way up here to the 12-month contract high at 567. That's from June 27th. I think it's just a little bit short of there. I think that high is, 565 and 3/4. So potentially just in front of that level anyways would be a potential target, maybe down here at 560. Again, keep your eyes open for trade recommendation in the Chicago wheat. Could come as early as Sunday night or Monday morning. The MACD is a little bit flat here, but there is strong momentum to the upside, so we may want to take advantage of that. So I've included my contact information here, local, international number, cell phone, toll-free number, email address. Feel free to contact me if you see anything in this video you have a question about, or just trading in general. If you are not a subscriber to the Trade Spotlight, I encourage you to do so. You can trial it for 90 days. I think that gives you enough time to see what I'm doing here. Just go to danielstrading.com, go to the advisories tab, and under technical indicators or technical newsletters, you can select Trade Spotlight. There's a little write-up on it. You can see some recent trades, some examples. Click on the orange button to subscribe. If you're a client of Daniel's Trading, it is a free resource to you. So either let me know or your Daniel's Trading broker that you want to be on the list, and we can go ahead and do that for you. So thank you for listening to me today, and happy trading.